Automatically. So whatever we are going to do here, when you're dealing with the cash budget, we are only looking for the cash. Where did we receive cash? When did we spend this cash? That is what we are looking for. And that's why we are using the name cash budget. That's why you're using the name cash budget. Good. So we'll now get to this particular question. Of course, we now know how to get the cash. Of course, not all sales are going to be converted to cash. Some people will pay on cash basis, others will pay on credit, maybe 1 month or 2 months credit. I told you, if you look at the card, the marking scheme for the card, there are some changes on the question that was related to the cash budget. You're able to see you are being told 50% paid, 55% paid on cash, and the remaining people paid on credit, but on equal monthly installment for the next 2 months. The next question we are going to look at after this, we'll be able to see, we are being told that those people who are going to pay cash are also going to be given a discount. The remaining people who are going to do it on credit will maybe doing it 2 months installment, or maybe in 2 months' time. The remaining percentage are going to be received without a discount, and even another percentage from that will be bad debts written off. So the bad debts written off will not find itself into this particular statement because we are only interested in tracing the movement of cash. If it is bad debt written off, yes, it is under sales, but it cannot be recorded as receipts because it was automatically written off. The debtors failed to pay whatever, or failed to obey their obligation by paying the credit purchases. The credit purchases, and therefore we are not going to recognize here under receipts. So let's go ahead and complete what was remaining. So we'll go through every question, every information given there, and then from that point you'll be able to understand what is going on. So we are told additional information number 1, the selling price per unit will be shillings 30,000 throughout the period. 40% of the sales are normally made on 1 month credit, the other 60% are settled in cash within the month of sale. So that is under cash receipts. It was already taken care of. Purchases of raw materials are shillings 10,000 per unit of production and will be paid after 1 month delay. So if you look at the units that were purchased, or the production there, the units that were produced there, we are able to see the production of the purchases of raw material are this one here per unit of production. So in the month of November, they produced 1,000 units. If you multiply by 10,000, you're going to get what we have here as the payment of raw material. The payment of the raw material is done 1 month in arrears. So in the month of November, yes, they made purchases of 10,000. Of course, they are in thousands here, but the amount that's supposed to be deducted from the account of the company will be done in the following month. The month of December, we have 1,200 by 10,000 will give us 12 million. The 12 million is supposed to be paid for in the following month, that is January of 2024. Then we have another 12 million being paid in the month of February. We have another 14 million paid for in the month of March, yet purchases were done in the month of February. So I believe we now understand what is going on there. We have 15 million, that is 1,500, 1,500. And then in the month of May, they made purchases of 1,600 by 10,000, 16,000. The 16,000 is supposed to be received in the following month. The purchases were done in the month of May, but then the payment is being done in the month of June. Even though June is not within the range that was given in the question, but maybe you can put it there to follow up on how the amounts are going to be spent. Then we are told there under purchases that direct wages is 6,000 per unit of production. Again, the wages are now being based on units of production. So 1,000 by 6,000 is 6 million. 1,200 by 6,000, 7,200,000, or 7,200 because they're in thousands. Another 7,200, 8,400, 9,096,000. But then that is the wages. How are they going to pay for the wages? Are they going to be paid for in the same month which they were incurred, or they are going to also be paid for on arrears. We are being told that additional information number 3, the time lag in payment of wages is 50% in the month of sale and the balance in the month following the month of sale. So if I sold this or I incurred wages of 6 million in the month of November, half of it, or 50%, is paid for in the same month, then the balance will be paid for in arrears in 1 month in arrears. Therefore, the remaining 3,000 will be paid for in the month of December. 7,200 you receive, 3,600 is paid for the same month, balance you pay the following month. 7,200 again, 3,600 the same month, balance the following month. The same to 8,400, that is 4,200, 4,200, 4,500 for 9 million, 4,500, this one and this, then this one and this one here, and then 9 million again, 4,500, 4,500, 9,600, you pay 4,800 in the same month, and then balance the following month. Then when we get to production overheads during the period to 31st of December 2023, had been, I think that's where we stopped. Yes, that's where we stopped at. Are we leaving something? Yes, that is it. So let's look at additional information number 5. Production overheads during the period to 31st of December, this month's year up to 31st of December, what was the amount? The production overheads during that period had been at 18 million a month and are expected to rise by 2 million per month. Do we have time lag on the payment of the production overheads? Do we have any time lag? Oh, we are skipping one there. Thank you for that. Let's start with that number 4. Let's follow that order. During the period, the business plans to advertise its products. Payment for advertisement of 10 million and 15 million will be made in January and March, respectively. So we have advertising cost or advertisement cost. So advertisement costs are going to be incurred 10 million in the month of 10 million in the month of January. So we come to January here, we spend 10 million. And then 15 million will be made in the month of March. 15 million. 15 million are being incurred in the month of March. Then production overheads during the period 31st to 31st December had been at 18 million. So we have production overheads. We have production. If you have any question, please raise it. Production overheads up to 31st of December, it was at 18 million. If you are keen enough, you'll be able to see the examiner is silent, not indicating whether they were paid for in arrears or they just paid for it in the specific month that it was incurred. So if they have not mentioned anything, on when they were actually paid for or not paid for, then automatically we are going to pick that as what was paid for. Then after 31st of December, going forward, it is going to increase by 2 million it's going to increase by 2 million in each and every per month. 2 million per month. So it means in the month of January, when I increase it by 2 million, I'm going to have 20 million or 20,000, 22,000, 24,000, 26,000, 28,000, and of course, this one is not part of the data unless it is extending to that point. That point is when we are going to use it. Okay, then we get to that part. The next thing that we have there, if you look at additional information number 6, a new baking oven machine will be bought and delivered in December 2023. It is being delivered in December 2023. But then what will happen after delivery? The machine will cost 66 million. This will be paid in 3 equal installments in January, February, and March 2024. So we have machine. Is it machine or oven? Oven machine. They are going to pay for it in the month of January, February, and March equally. They have mentioned the word 3 equal installments. So how much am I going to debit or indicate in the month of January? The total is 66 million or 66,000. Then we divide it for the 3 months. So how much will I record in the month of January? How much? 22 all the way to March. If you add all that, you should be able to get the total value or cost of that oven machine. Then we are being told, number 7, a loan of 100 million is being issued in December, and the amount is expected to be received in early February 2024. So the loan, of course, that is cash inflow. It was issued here early February. But another thing is now coming up there. We are being told that interest on loan at a rate of 1% per month shall be charged from February. 1% per month. How much did they borrow? They borrow 100 million. When you charge 1% per month on 100 million, what will be your interest? 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 Alafu tujibu Florence. Interest on loan. The interest on this loan is 1% and payment is going to be done from which month? They are starting to do the payment of the interest on this particular loan from the month of shall be charged from February. So starting from February, we are going to have interest on the loan. It is 1 million. So if I bring in the 3 zeros, I'm going to have 1,000. Thank you. Yes. That is what we have there. Let's now get back to Florence. We said credit. Florence is mentioning something here. You say that bad debts are not receipts, so they are payments. If you sold goods to your customers, and they have not paid for the goods, you record that as debtors. Is it? You record it as debtors. That is, you have hope that in the near future, they're going to pay for the goods that they took on credit. Should they fail to pay for these goods, then you don't expect anything from them. How will you recognize that loss? You take it to income statement as an expense. That is bad debts written off. Is there somewhere you're going to write a check to pay for the bad debts written off? The answer is no. You will not incur any amount of money. So the bad debts written off will not be recorded here as maybe receipts or payments. It's just an expense that you're going to charge. It reduces your receipts, but it is not affecting what you are going to receive here. You are told 40% maybe is cash, 50% credit, but will be received in 2-month installment. The remaining portion was not realized. So it is just there to help you know how you're going to deal with the remaining portion of the total sales. How will you write it off? It is not going to affect any cash within that particular workings. Okay, then we are told number 8, an outstanding tax liability of 16 million is due in March 2024. So we have tax liability. It is due in March. It is due in the month of March 2024, and the amount is 16. The amount is 16 million. Then we are being told that in the same month of March, The company intends to dispose of surplus baking ovens with a net book value of 11 million. For how much? 6 million. So the 6 million that you're talking about, proceeds on disposal of oven. You're going to record it here. If you are told to come up with budgeted income statement, then you get now back to a FAR concept. You get back to a FAR concept where you're going to record it to us oven account or oven machine account. You are disposing it. Remember, you are recording maybe your transactions at net book value. So balance wrote down, you're going to indicate it there. Did you purchase any? We are told that some were purchased somewhere here. Oven machine was purchased 66 million. So you're going to have bank increasing the oven account by 66 million. Then you are going to come here and give us what we call depreciation. You are keeping this account at what? At net book value. So depreciation will be affecting this account. You indicate. They have not mentioned anything about depreciation. Then you give us what will be going to disposal, which you have told at net book value, they are disposing an asset of 11 million. Then you get the balance carried down. If you are told to prepare budgeted income statement, because you're going to look for the gain or loss on disposal. We come to disposal. Disposal here, you're receiving some amount from oven. The asset which is disposal, oven account will be bringing 11 million. This 11 million, at what price are you going to sell it at? How much did you receive? Proceed, that is amount going to the bank. You received 6 million. The value as at the time of disposal is 11 million. You disposed it for 6 million. Do we have gain or loss? We have a loss, which will be taken to income statement. We indicate loss of how much? Of 5 million, and automatically the account will be balancing. The account will be balancing. Mtu aoni kitu kabisa. So that is what we have there. Pardon, the T account. So this one is not part of management accounting, but if you're going to look for the loss, or gain on disposal of an asset, then you have to prepare the T account, whereby this one you have the asset account, the non-current asset account. Then you come to the disposal account where you're going to record the gain or loss. The value, the net book value of your asset as at that time, ni 11 million. You are disposing it at 6 million. Are you making a profit or a loss? Value yake, your phone, which you have as at now, your laptop, which you have as at now. If you look at the value, you look for the value, you'll be told it is 11 million. If you use now the net book value, the depreciation concept. But if now someone wants to purchase that particular phone or laptop, they are telling you that they can only give you 6 million. Are you going to have a gain or a loss? Its value is 11 million. You are selling it at 6 million. So that is loss on disposal. The loss on disposal is not going to be a cash. What you are going to receive, the amount of money you're going to receive into your bank because you are selling your asset is 6 million. Not the loss, not the gain. If you can recall, those who are doing a FAR as at now, you'll be able to see when you are dealing with the statement of cash flows, or even those who did a FA, you'll be able to understand that we were not recording gain or loss on disposal of assets. Under cash flow from operating activities, we were adding back loss on disposal of assets because that loss is not money. It's just the accounting concept. It is not going to be money. There's no single day you're going to say, let us write a check of 5 million to pay for the loss on disposal of our asset. No. It's just a matter of fixing the movement. How will you adjust the balances and then see what you have in your books of accounts? That is what we have there. So automatically this loss or gain will not affect you. So you're only going to look for the movement. How much did they receive? The 6 million is what we used up here. So having done that, Having done that, they have paid for the tax liability. They have paid for the tax liability. They also received 6 million for the disposal of the excess assets. Number 9, a depreciation expense is expected to be 5% of actual sales per month. Someone help us to adjust that. Depreciation expense is expected to be 5% of actual sales per month. Our actual sales is given there as 800. And of course, it is not on units, it is on the value of sales. So it means we are going to look for the 5% of sales in November. We're going to be able to get depreciation in November. 5% of this, we're going to get depreciation in the month of December. So how are we going to deal with it? How will we deal with the depreciation? How will we deal with the depreciation? Yes, someone to help us there. How are we going to deal with this depreciation? How will we take care of this depreciation? So that depreciation has no value. It has no effect on what you are going to do here. It is not involving money in any way. So that is what we have there. That is what we have here. So depreciation will not find its way here, because there's no single day you're going to say, I withdrew money from the bank to pay for depreciation. No, you cannot tell us that. You have not paid for depreciation. We just adjust it. It's a matter of being adjusted in the books of account of the company to trace the reduction in the value of an asset due to wear and tear. So that's why we are adjusting it in the books. But there is no single day you write a check to pay for depreciation expense. So what we are preparing here is a cash budget. Kama it is not involving money, then we are not going to include it here. We're going to ignore it. So let somebody go ahead and give us the totals. How much are you getting as the totals for that is total payments. Total payments utakuwa na ngapi? Total payments unakuwa na ngapi? Total payments unakuwa na ngapi? And because you have the statement with you, allow me to go away with this part here. Allow me to remain with the total receipts. Give me the total payments for total payments. What do we have here? If you add everything in this column, what will you have? I want to put it somewhere here. Of course, these wages here, it was the total wages, but then when we moved down, we are looking at the wages that were paid for on the same day or on the same month, and then the balance, when were they paid for. So maybe if I do away with this one here, it will not affect you so much. So let's look at the total. Total payments. Watu wamepata kweli? December 36,400. 34,600. Then November 21,000. Ukiongeza easy. January 68,400. January 68,400. I want you to give me the figures all through, then I do away with whatever is down here. February, January sasa watu wako na vitu tofauti sana. Wacha tungoje mtu atuambie the correct answer for January. January 22,000, 20,000, that is going to be 42, 52, 64 plus 72. Inakuwa ngapi? 64 plus 72. 64 plus 72. Inakuwa na something na 100 na 600 hapo. Tuongeze vizuri. This is 12,000, this is 7,200. Hiyo ni 19,200, 29,200, 29,200 plus this 49,200. 49,200 plus 22,000. Tunapata ngapi? Plus 22,000. 49,200 will be 71,200. 71,200. How about this other one? Ukiongeza hizi zote unapata ngapi? This is 36. This is 3,600. February 64,200. Then March 97,700. April, May, or March 70. May ni ngapi? Or April ni ngapi? April tunapata ngapi? April tunapata ngapi? 45,000. 45,000. How about May? May tunapata ngapi? You add everything here. 15, that is going to be 16. Together na 45, that is 2,500. 2,500, that's going to be 48,500. 48,500 plus 4,800. Itakuwa 52. 53,300. Hapa ni ngapi? Simliniambia loan is 100,000. 100,000 ukitoa the 3,000, the 3 zeros hapa times uliambiwa 1% ama 10% of the loan. It was 1%. So what is 1% of 100,000? 1% of 100,000 itakuwa ngapi? Si ni 1,000. Na imelipiwa from when? From February. So from February, March, April, May, zote inakuwa 1,000 for per month. It is 1% per month. Ama there's something different there. Kama ile. Okay, so give me the figure for May. Nimeambiwa hapa ni 51,000. 1,300 ama ni 51,002. You have written 10,000. Oh. So it means this one is reducing by 9. Hapa sasa ni wrong, si ndio? Is this figure correct? Is this figure correct? No. Haya sasa watu. So it means majority wana copy two notes hapa. Majority wana copy notes. So can I get the figure for this year, for this month? It's correct. 64,800. 64,800. How about this? Is it 51,300 ama ni 51 flat? Hapa ni 51. May is 46,300. 53,300. Where? 53,300. Watu wanapata 53,300. 53,300. So are we okay with that? Are we okay with that? March is 99,700. Kwa hivyo watu hawajui kuongeza vitu. April 51,000. April pia ni 51,000. Hapa. 4,500, 4,500, 9,000. This one plus this 16,000. 16 plus 26,000 itakuwa 42. Watu wametoa hizo vitu mingi wapi? Watu wametoa hizo vitu mingi wapi? This is 9,000 plus this one here will give us 16. 9,000 plus 15,000 will give us 24,000. 24,000, 50, 51. Yes, that is it. So are they correct now? Before I do away the figures, is everything correct? Is everything correct? Sasa watu wameshindwa kufanya hesabu kabisa. Do you want me to look for my calculator to do the additions? Na sasa watu wamesoma vitu mingi sana. Okay, please confirm to me. Is the figure for November correct? Is this figure for November correct? How about December? How about December? How about January? Is the figure for January correct? February? February? March? 100, 700. Okay, April. Is the figure for April correct? Is the figure for May correct? How about June? Tuongeza hizi vitu napata ngapi? Is it 2,800? Is it 2,800? Is it 2,800? Just to confirm. For your case, of course, I know you still have space down there to do what is remaining. Sasa kama hii rahisi ndio inashinda watu. Tukienda kwa hii nyingine, naona watu wakikwama sana. Na watu wakikwama hapo sana. Now, for the current period, this is what has happened. For the current period, the company has managed to receive, we have done sales, this is the total receipts, this is the total payment. So what are we going to do? We are getting now to what we call net receipts. So net receipts during this particular budget, net receipts, are you able to get net receipts? Whatever you received, less what you spent will give you the net receipts. So hapo tunakuwa na ngapi? The first one tunakuwa na ngapi? Net receipts for November. Net receipts for November. Tufanye haraka kidogo please. Fanya haraka kidogo. The difference, this one minus this, tutapata ngapi? 12,600. Of course it is. They spent more than whatever they received. How about this? How about 27,600 minus 34,600? Is it 7,600? This is 27 minus this. Somebody is lying to me. Somebody is lying to me. Wacha niweke hii ndio ikuja hapo penye mtu anadanganya. And they spent more than okay. November is 6,600. Kuna mtu mwingine hapa haifanyi mahesabu kabisa. Who is this person? Ni nani huyu tumjue sasa? How about December? Is it 7,000? December is 7,000, but negative, is it? They spent more than. How about January? January is negative. January is negative. What figure? January is negative. 37,600. 37,600, really? Oh, yeah. Na ni negative. How about February? February ni ngapi? Someone should be calculating March. February 73,000, March 53,900. Thank you. Negative. Alafu hiyo ingine ni 73,600. Hai. Si hapa tuko na 8 na 8. Nafaa ikuwe flat figure. Night, check. Is it 73,600 or 73,000? Night, angalia vizuri. Night. Night give us 73,000. Na hapo itakuwa positive ama negative? It is positive because they received 137. They only spent 64. So hii ni positive. Lakini hapa they spent more than whatever they received, so ni negative. How about April? How about April? Mtaja calculate April. As you look for April, someone should be calculating June. 18 minus this. 5,400 negative. How about June? How about June? June mtu anapata ngapi? June tunakuwa na ngapi? 7,100. June 20,800 minus 18,000 minus 2,800. Inakuwa 7,100 kweli? 2,800 negative. 2,800 negative, is it? So that's what we have. That is the net receipts as per this particular year. But do we have opening cash? So you could have come here and indicated opening cash balance, and then when we add it to the net receipt, we should be able to get closing cash balance. I believe you're able to remember this when you are doing what we call, of course, margin and absorption costing. When you're dealing with the units, we're able to see the closing units of the previous period is the opening units of the current period. So are we given opening cash balance of the previous period? That is October of 2023. You are not given, is it? So if you're not given, automatically you're going to have 0 here. Then this one here, you want to an opening cash balance, you're going to have a deficit still of 6,600. That deficit is the closing of November, and it becomes the opening of December. The opening of December, you add to whatever was realized in that particular period, you have a negative of 13,600. Then you come to this part, negative 13,600. Don't write this part here, I'm just illustrating. Then you get to the exact question. So 37,600 is a negative. You also had a deficit of 13,600. So it means your deficit has even increased. Your deficit has even increased. Your deficit has increased. Your deficit has increased. Your deficit has increased to 51,200. This closing becomes the opening of this period. Then now you add to the positive figure that you are having in the current period. Sasa utapata ngapi hapa? How much will you get here? I believe you've seen the trend. How much will you get here? Whatever you have for the current period, that is net receipts, then you add the opening. Tunakuwa na 21, tunakuwa na positive ya 21,800. This one here becomes the opening of the previous period. That is the trend. But now, having done everything without considering the month that the examiner was interested in, at this point, you are now free to concentrate on the month that the examiner wanted you to calculate. You are now free to do what? To concentrate only on those months that you are required to do. So there's additional information there that's telling us about the opening cash balance. Which number is that? There's additional information there talking about the opening cash balance. Are we able to see it within the question? Are we able to see it? Bonnie is telling us that it is additional information number 10. Is there someone who is able to see what Bonnie is seeing there? Tunaona hiyo number 10 sisi wote ama? Okay, we have been told the bank balance as at 1st of January 2024 is expected to be 15 million. January, 1st of January, the opening. Hajasema closing. In some cases, by the way, you will find them telling you the closing cash balance of December. The closing cash balance of December is equivalent to this figure. And actually, that's what they mean. If they tell you that the closing of December is 15 million, it's the same as telling you the opening of January is 15 million. So tuende hapo hivyo tuangalie opening cash balance of January. Opening cash balance of January is 15 million. Sasa hapo unaweza kuwa na ukora yako January, the opening cash balance hapa January ni 15 million. So the net receipts for the current period, is negative 37,600 or overdraft of 37,600. Then they have an opening cash balance of 15. So it means going to reduce this overdraft. So what will we have as the closing cash balance? The closing cash balance itakuwa ngapi? Somebody now to give us the figures to insert there. Hii ni deficit. Oh, they're talking about deficit within the question. Yes. Nataka kuona kama watu wanafollow. They said deficit. Kama ni deficit, it means it is an overdraft. Already wako na overdraft ya 15 million. Ukiongeza hii overdraft, I mean deficit pia, the net receipt which is a negative inaongezeka. So what is the total balance for the overdraft? 52,600. Overdraft. That becomes the opening 52,600. 52,600 ukiongeza na 73,000 which is a positive, unapata ngapi hapa? Tunapata ngapi hapa? What are we getting down here? 2,400. 2,400 is the closing, which becomes the opening of this other side. Lakini umepata tena net receipts ni negative, so it's going to reduce this negative by how much? Is it 26,100? Is it 26,100 hapa? What is the figure, the value for that negative? 33,500. Sasa watu washaenda mbali kabisa. Tuko na negative 53,900 plus positive 2,400. Mtu anapata 73 aje hapa sasa. Weka tu kwa calculator, just put this kwa calculator, negative 53,900 plus 2,400. What are you getting? I now have again 33,500 na tuko na 13,100. So trust nani? Whom will we trust sasa hapa? If I look at this very well, this is 3, this is 3, this is 5, 33,500, but it is a negative. So kama umepata anything apart from 33,500, please check on your calculator. Imagine having learned this concept vizuri hivi alafu nakosa juu ya kuadd na subtract. I have this negative. I come up here and bring the negative 33,500. I have another negative. So it means the negative will automatically increase. When the negative increases, what will I have? Wacha nione chenye watu watapata. What are you getting? What are you getting? What are you getting there? The last year, that is this one here. That is for the month of May. Are you getting 46? Are you getting 46 for the month of May? Then how about this? 46. Na umeongeza tena negative, itakuwa so that's what you are required to do in that question. That's what you are required to do in that question. So the examiner was interested in getting 4 months up to the last date of April. And that's where now we are going to mark. We come to your work very well. As you've seen, you must have the figures for February for you to be able to calculate March to some extent, some of the items there. But now we are interested in April here to January. So I come to this part and get good. So these are the points there. These are going to give you marks. So for your information, this small part here, this area here, unaona hiyo part ndogo cannot give you 10 marks. Cannot give you 10. This one here cannot give you 10 marks. Is place ndogo. So we're going to look at how are you calculating your sales from upper November. Were you able to calculate these sales correctly? How did you distribute the sales? The cash, ndio hii. How about credit sales? It was received 1 month in arrears. Ona penye amefika hadi May. Because there are some figures for this month here will help you to calculate something even for the month of February. How about payments? Something done in for the total wages you're able to see, you just calculate wages first, then you distribute the cash payment and then payment in arrears. Kindly explain why we did not use the 50% wages. Hatukutumia 50% wages. Wacha tuone. Wacha tuone. Direct wages is 6 million per unit of production. Per unit of production. Please check your workings. Check your workings under expenses. Uniambie hatukutumia kitu kama hii. You first of all record the wages. The wages there is 6 million. I mean 6,000 per unit. So the 4 units that were produced. For these that were produced. Angalia workings zako. I want you to help me understand that very fast. That is Chibero. We said wages. Just check your working somewhere. We just indicated wages somewhere there before even indicating payments. Tukasema, because the units that were produced in the month of November is 1,000 by 6,000 is giving us 6 million. Then there we also add 7,200,000, 8,400,000. Hapa mkaniambia ni 9 million. What is the figures? Niambie hizi figures easy. Tell me these figures that we posted here. 1,500 by 6 million. 600 by 6 million. Hapa ilikuwa ngapi? After 9 million tulikuwa na ngapi hapa? After 9 million tulikuwa na ngapi? Now, leave alone even up to this point. Alafu, uniambie, we said 50%. The time lag in payment of wages is 50% in the month of sale and the balance in the month following the month of sale. We made the sales in November. Is it? We made sales in November. When we made the sales in November, these wages here, we only pay half. So cash payment of the wages, then wages in arrears. The cash, you are indicating half of the amount there throughout. Throughout. The other half is supposed to be paid for the month following the month of sales. We did not pay for it here. Hii 3,000 imebaki tulilipia hapa. Angalia your workings kama kuna kitu kama hiyo. The 3,600 that is remaining was paid for here. 4,200 that is remaining was paid for here. 4,500 ilipiwa huku. Angalia kama uko na vitu kama hizo. Angalia kama kuna vitu kama hizo. 8400 then 9 million then 9 million again. Then 9600. Angalia kama kuna vitu kama hizo. Angalia. Great. So that's how you're supposed to do this particular question. So I want you to confirm to me that should you come across a question of the same kind, you will be able to tackle it. I want you to confirm to me that should you get a question of the same kind, you'll be able to tackle it. So is this now clear to everyone? Tuko sawa hapa? Are we okay with this? Are we okay with what is going on here? So if you look at what was tested in, is it April 2022? April 2022. April 2022. Angalia hapo vizuri, you will be able to see a serious question for the cash budget. Hiyo ukipata, you are done with the budget. You are done with this topic of if you are able to do that question for April, you do the discount. Discount, sasa hiyo mtu alipewa hiyo unasahau hivyo. Discount inapunguza what you're supposed to pay, but your interest is basically to look for the movement of cash. So wewe unatafuta tu hii cash ilienda wapi? Hii cash ilizunguka hadi ikafika wapi? That's what you should be. That's what you should be looking for. I do not know whether time will allow, but let me try very fast. Ama hiyo ikae assignment. Hiyo ya April watu wanaweza fanya assignment alafu tupatane tukirevise. April 2022 question number 5A. April 2022 question number 5A. It is the same as what we have done here. The only thing you need to understand, let me just give you an illustration. Umepewa January, February, March, April. So we have January, sales. Sometimes you're going to be given the sales or you calculate the way we've just done in the concluded question. So we have sales. We have 80,000, 196, 120. Additional information number 1. Additional information number 1. Additional information number 1. Let me pick it from that part. Ukitumia hiyo information itasaidia watu wengi. So we want just to use that additional information to tackle this part. So let's go to that question very fast, the CPA question. April 2023, twende hapo mbio mbio. Twende hapo mbio mbio ndio tuangalie what will be confusing in that question. Nataka mfanye hiyo so that when time will be there, we simply try and do it as the last part. The last part of revision. Have you been able to access the past papers? Iko hapo kwa group kweli? Is it there in our WhatsApp group? Kama iko kuna folder hapo tunaweza zifuata mbio mbio. Tuangalie April 2022 question number 5. A question 5A ama CPA 2022 April. Management accounting. Haya, sasa tuangalie hapo vizuri. Tunaambiwa is it April 2022? Ni April 2022 ama April 2019? Which sitting is that? Ni 2023. Hapana, wachana na hiyo. Kuna ingine. It's 2019. Let me check very well. It must be a question from 2019 hapo. Hebu tuangalie 2019 May. That one is not bringing out what I want. Okay. I want us to tackle that concept. Of course, we are going to do the question. Ukimaliza unatuma na kupatia solution. We are being told there that is December 2021, question number 4B. Let's use this. Let's use this one here to answer the question. Or if still we can use what they have there, but that one will be like giving you a leakage. Let's use this. So I want us to use additional information number. I want us to use the additional information number 8. Using additional information number 8, let's answer the question. Tuseme, you want to get, having identified the sales, you want to deal with the receipts. You've indicated the sales there very well. So for you to deal with the receipts, of course, these receipts are going to be divided into 2 or even into 3. Into 2 or even into 3, depending on the interest of the examiner. Hapa watakuzungusha sana. If I want you to just get maybe 0 or 2 marks in this question, I can just bring one statement, then you get 0 or 2. But let's see what they want you to do here. So, in reference to additional information number 8, we are being told 20% of debtors pay cash. 20% of debtors pay cash, receiving a cash discount of 4%. And 70% of debtors pay within month and receive 2.5% discount. Well, the remaining debtors pay within 2 months without a discount. Tumeelewana? So let's answer that question. 20%, so we want to talk about receipts here. First of all, there is cash. The total sales is given up here, but the cash sales is 20%. So can someone go ahead and give us 20% of 80,000? 20% of 80,000 ni ngapi? 20% of 80,000 ni ngapi? 16,000, is it? They are supposed to pay 16,000 if they paid cash. Lakini, wanapewa discount of what percent? They are receiving a 4% discount. So 16% is equal to 100%. Wakipewa discount ya 4%, they're supposed to pay us how much? 96%. So how much is 96% of 16,000? 96% of 16,000 ni ngapi? %96 of 16,000 ni ngapi? 15,360. Hiyo ni wenye wamelipa cash. Okay. 20% wanalipa cash. Then tunaambiwa 70% of the debtors pay within 1 month. 70% of the debtors pay within 1 month and receive 2.5% discount. Within 1 month, hawatalipa cash. Tuko na debtors 70%. Wanalipa within 1 month. After kuchukua sales on January, they are paying for it within 1 month. That is the month of February. So debtors 70% of total sales ni ngapi? 70% of 80,000 tunapata ngapi? 70% of 80,000 unapata ngapi? 56,000. Wakilipa within 1 month wanapewa discount of what percent? 2.5%. So it means how much are they going to pay us? 100% is equal to 56,000. If we give them a discount of 2.5%, they're supposed to pay us 97.5%. Itakuwa ngapi? 97.5% inakuwa ngapi? $54,600. So 54,600 unalipa the following month after 54,600. Hiyo ni ya hapa juu. Hii sales ya January. Haya, tunaambiwa 10% wanafanya nini? Well, the remaining debtors pay within 2 months without a discount. So, debtors, the remaining 10%. Ukiongeza hizi vitu, are they giving you 100%? Yes. So the 10% debtors are going to pay within 2 months. They don't pay cash. They don't pay within 1 month. They are paying within 2 months. So what is 10% of 80,000? 10% of 80,000? 10% of 80,000 ni ngapi? 10% of 80,000 ni ngapi? 8,000. Lakini hawapewi nini? Hawapewi discount. They pay the full amount. Nataka tufuate vizuri tuone. I want us to follow this clearly. Then we see if all that you're going to include here will be equivalent to this 80,000. And sasa tuanze kutafuta discount. These people were supposed to pay 16,000. Walipewa discount ya 4%. Wakalipa 96. So can you give me 4%? 4% of 16,000. Hiyo ndio discount walipewa. Alafu 70% of 8,000 tulipata 56,000. Wakapewa discount ya 2.5%. Give me 2.5% of 56,000. Tupate hizo discounts tuongeze zote. Then to that we add the cash payment which is 15,600. To that we add the 70% debtors who are given discount 54,600. We add to debtors who are not given any discount. So what is 4% of 16,000? 4% of 16,000? Naambiwa ni 640. Naambiwa hapa ni 640. Then 2.5% of 56 ni 1,400. Add everything here. If you don't get 54,600, 15,630, ama 15,360, 15,360, 54,600. If you don't get 80,000, tunaanza kufanya hii hesabu. Add everything. Are you getting 80,000? Are you getting 80,000? Are you getting 80,000? Are you really getting 80,000 ama tunapata more than 80,000? Now, I want us to do it the same way, but now we don't have time to do all this. We don't have time to do what? To do all this. You have limited time in exams. Hii mambo ya kutafuta percentage, sijui uongeze, sijui utoe, hiyo wacha watu wenye wanaanza kufanya CPA. Not you who is moving towards BBA. Hii wacha wenye wanaanza kufanya nini? Wenye wanaanza kufanya CPA. You are now at the advanced level. Of course, the answers are going to be the same, but I want us to confirm. I want us to start first of all, deal with our cash wote to deal nayo hadi hapa mwisho. Tukuje to deal na watu wa 70% to deal now hadi hapa mwisho. Then we come to the 10% group. So let's start. Those people who are going to do what? Who are going to pay cash, they are 20% of the total sales. Our 20% of the total sales for that particular month, they are receiving a discount of 4%. So how much will you be receiving? We are going to receive 96%. 20% of 80,000, tunapata hiyo figure. Then the figure that we are getting, we reduce by 4%. Tunapata 96. Then now you multiply by sales. Sasa hizi ndio unakuwa na change kwa calculator yako. Now, I want you to put the whole of this. Of course, 20% is the same as 0.2. This is 0.96. Alafu na multiply na 80. What are you getting? What are you getting? What are you getting? Keka hii yote hivi. Aya, hiyo ni 15,360. Go ahead and put that one of 100. What you just edit that formula, utoe hiyo 80,000, weke 100,000. Unapata ngapi? 19,200. Ukiweka ya 96,000 unapata ngapi? Unajua mtu amepotea mahali tu. Na shabaki tu hivyo, imagine. About much? Everything intact, you just change the last figure. 18,432. Aya, 120,000. 120,000. 2304. 2304. About May, sasa zinakuwa vitu mingi. Tuachie hapo. About May, 34,800. Ukifanya hivyo kumemalizana na watu wa cash. Tukuje kwa sasa, this is the cash group. This 70% debtors, unakuja hapa 70% debtors. You first of all get 70% of total sales that will be representing these debtors. 70% of total sales that will be representing these debtors. Wakilipa hiyo within 1 month, wanapewa discount ya what percent? 2.75%. 2.75%. 2.75%. So it means we are going to receive, yes, 70% of them are going to pay after 1 month, but we are not going to receive that full amount. We are going to receive 97.5% because they are entitled to a discount of 4.5%. I could received in the same month, 1 month after. So can you give me the figure, the first one here? What do you have for January? Debtors, here January, una receive February. So we just know it is 80,000, but tunaipata lini? February. Ya February tunapata March. So what are you getting? How about for February? For February is of 100,000, but it's supposed to be received in March. So ni ngapi? That is, you multiply by 100,000. Hii yote you just change here to be 100,000. 68,250. Aya, just change 100,000 to 96,000. Unapata ngapi? Unapata ngapi? 65,520. Alafu unakuja hapa ya 120 una receive in May. So what about May? 120,000 hapa tu ndio na change. Hapa tu ndio na change. I'm lost kidogo. Where have we gotten the 80,000? We have, this sitting here, this sitting has got a question. I've said it is an assignment. And because it is an assignment, the last additional information there, itasumbua watu wote. So I'm trying to use these hypothetical figures to help you get the concept. Once we are done with this illustration or demonstration, you now get to that paper, do the whole of it, you share with me, then I give you the scheme. Okay, so let's now proceed. Tulifika wapi? Tuko hapa. The whole of this, but now by 120,000. Unapata ngapi? Kila kitu intact, you don't change the last one. Here 120,000 tunapata ngapi? 81,900. If you decide, of course, you know what the implications sasa ya May una receive when? Una receive June. So of 200,000 una receive ngapi? Of 200,000, is it 36,864? Oh, there's something that I'm missing. Ni ngapi of 200,000? 136,500. 136,500. Sasa ona sales za May zinapatikana June. Ingine itaenda hadi July. Wacha tuone. Kuna ingine inaenda hadi July saa hii tu. Aya, tunaambiwa 10% are supposed to pay, no discount, but supposed to be received in 2 months time, is it? Ukimake sales January, unangoja, una receive that in 2 months time. Una receive when? Una receive March. So tukuje hapa, there is no discount. You only look for 10% of the total sales all through. The only thing that's going to change is that you're going to receive it after 2 months. Bora tu may skip the first 2 months easy. Umeuza hapa, una receive after 2 months hapa. So proceed that way. 8,000, it is 10% of 80,000. Una receive March. The next one is 10% of 100,000, which is the next one is 10% of 96,000, which is 9,600. 10% of 120,000. Ona sasa kitu liuza April unaipata June. Na June iko kwa bracket yenye umepewa. Haya. Ukikuja hapa May, kitu unauza May 200,000, 10% of that ni 20,000. Ona penye una receive July. I receive July. So assume you are told to prepare from March to May. Tuko hapa, wewe umeanzia kila kitu hapa March. Ona kitu utapoteza. There's something that was sold in January, una receive March au kucapture. Haya, kuna kitu uliuza February, una receive when? April au kucapture hiyo. So that's how you extend this for you to be able to get everything before and after the time requested in the question. So tuko sawa na discount allowed. You are giving out discount. If they're going to affect your workings here, they're going to be marked. If they will be affecting your workings here, they are going to be marked. But the interest of the examiner is, are you able to give us all that were asked? So what you need to do, you can avoid the extending ones, but the ones that are coming before that period, hizi za kwanza usikubali kuacha, to do all of them. Good. So are we now okay with anything to do with the discount allowed? This is the business allowing its customers. Hapa kwa question, mtu aoni hiyo 10% nimetoa wapi? Cash. Wenye wanalipa cash ni 20%. Wenye wanalipa in 2-month installment, debtors 70%, 1 month installment. Then 1 month installment 70%. Alafu sasa tumebaki na group ingine wanalipa 2 month installment. Debtors 2 month installment. Your sales hapa ni 100%. Umetoa 20% wamelipa cash. 70% wamelipa after 1 month. The remaining percentage wanalipa after 2 months. Ni wangapi? Unafaa upate zero. Ni wangapi sasa? Ni wangapi? %. Hii X ni 10%. Ndio hii hapa. Na hii ni rahisi. You know what the examiner normally do? They are going to tell you that 10% of the debtors, I mean 20% of the debtors wanalipa cash. Na hiyo discount yote. Tukitaka kuanguke hapa hivi ni kazi rahisi sana. Nakwambia tu vizuri. Sasa tumefanya hivi vizuri hivi. I'm going to tell you that 20% wamelipa cash. Amepewa discount. Kwanza mtu mmoja ashapotea kwa hiyo discount. alipotea kitambo. Naona mwingine ameng'ang'ana, ameovercome hiyo discount. Sasa kumwangusha tena, nakuja na kuambia 70% of the remaining creditors. Tunaelewana? 70% of the remaining creditors. Tumejua tumetoa 20%. Hii 20% will be subjected to the total sales. Ukitoa 20% of the total sales, unabaki na 80% of the total sales. Sasa unaambiwa 70% of 80%. 70% of 80%. You 20% wamelipa cash. 80% hawatakuwa wamelipa cash, ni debtors. Alafu our debtors wenye wamebaki, unaambiwa 70% of them wamelipa after 1 month. 10% of them wamelipa after 2 months. 5% of them hawakulipa. Then the remaining 5% of them walifanya nini? Walilipa na hawakupewa discount. Ukileta hivyo, kila mtu wenye hawakuelewa hiyo kitu, apart from yosoma RCM, utakuwa unaona tu 0 0 0 0 0. That's how it is going to happen. So get to understand the language of the examiner. Wanakwambia 20% of what? Of total sales. Alafu kisikia tu 70% of the remaining debtors. It means the remaining debtors ulitoa 20 kwa 100 kwa total sales, umebaki na 80%. So 70% of the remaining ni 70% of 80. Hawajasema 70% of sales. 70% of the remaining debtors who did not pay cash. So understand, in our question you have been told 20% walilipa cash, 20% of sales. Then CRT 70% of the balance, wametuambia tu 70% debtors 1 month. Then the balance, the remaining sasa walifanya nini? Walilipa after 2 months. So get the language of the examiner. Usipoelewa utafanya things perfectly, but because you just missed a word, kila kitu ni wrong. What happened to the discount? Where do we record it? Discount is not cash. Did you receive money in the name of discount? Uli receive pesa kweli? Walifaa wakulipe ngapi? Walifaa wakulipe 56,000. Tuliona hapa hivi. Walifaa wakulipe 56,000, actually 16. Hii tulipata ni 16. Walifaa wakulipe 16, ukawapatia discount. Wakakulipa ngapi? Wakakulipa 15,360. Walienda na 640 kama discount. So hiyo ni income to them, not to you. Na hata hao au kuwalipa. So hiyo sio cash. And if the remaining debtors were to pay within 2 months, then why that 10,000 is not appearing in April? If they were to pay after 2 months, why is that 10,000 appearing in April? Na hiyo ukilipa cash, si month ni 0, unalipa the same month, the same time umenunua vitu unalipa. So if you are supposed to pay cash, unalipa the same month. If you are allowed 1 month, it means unalipa the following month, si ndio? 1 month from the time of purchases. Aya, wacha tukuja hapa tuhesabu. From January, ukinunua vitu January, umelipia February, hiyo si ni 1. Ukilipia March, hiyo si ni another 1. How many months are this? Is your question answered? Is your question answered, Florence? Is your question answered? Great. So that's all about this. Ukisoma hiyo question ufanye upate kila kitu hapo, then you don't need to waste time again doing revision on cash budget. You don't need to waste time doing revision on cash budget. So we are going to do flexible budget. We're going to do something about flexible budget. What is there is very, very simple. what is there is very, very simple. It takes you back. It takes you back. Hiyo ni kutwist tu hiyo alafu tunaelewa. So it takes you back. It takes you back to topic number 3, where you are coming up with the cost function of y equal to a plus bx. This one here is the total cost equal to total fixed cost is equal to total fixed cost plus variable cost per unit times activity level or units. Total variable cost. Total variable cost. When you are dealing with flexible budget, if this is your total cost, the only thing that is going to change for everything there is due to change in activity level, which will be affecting your total variable cost. But variable cost per unit is constant. Tuelewane hapo. Variable cost per unit is constant. The value of B is constant. The value of A, which is total fixed cost, is constant. The only thing that's going to change is what? X. Is what? X. This X here is what you call the activity. Activity level. And when you're dealing with budget here, this activity level in most cases will be units produced. So utakuwa unaona in an exam, the examiner is telling you 60%, 80%, 90%. Alafu anakuja hapa hivi anakuambia material, direct, labor, then you get prime cost. But they just give you that, just give you direct material, direct labor, production, overheads, then production, overheads. Na tunaelewa vizuri, when we are doing marginal and absorption costing, we are able to identify that the production overheads are divided into two. We have variable and fixed. Hapa wamecombine zote. Non-production overheads, we are able to see we have variable selling and distribution cost, and we also have fixed selling and distribution cost. The fixed non-production overhead and the variable. Tuko nazo. But now they have combined all of them. Hata hii direct material unapewa hivyo, direct labor unapewa the total amount incurred at each level of activity or level of output. So unaambiwa if they are operating at 60%, unapata hii, at 80% unapata hii, at 90% unapata hii. Of course, the units will be different, so you expect them to change based on units. But within these costs that are given, there's that fixed element. There's that fixed element. So how will you identify the fixed element? Tunatumia hii. Back to topic number 3. Na tuko topic number 9. Under flexible budget. There are some costs that are going to be fixed there. Hata ukiangalia tu statement umepewa hapa hivi. If they don't combine all of them, you'll be able to see something like at 60% it is constant, at 80% it is constant, at 90% it is constant. What does it tell you? It is a fixed cost element or item. So that's what you need to identify. Basically, if you're dealing with flexible budget. So ukiangalia vizuri, is it May 2019 question number 5A? May 2019 question number 5A, you'll be able to see what is given there. They are giving you percentages, they are giving units of output. So it is upon you to identify this. It's upon you to identify this. Then from that point, you can now go ahead in the question and give us a full budget when the activity level is at even 40%. Kuna zile fixed costs that are not going to depend on activity level or units of output. But after that, you look at what the variable costs are going to represent. And because you have variable cost per unit, and you have units that are produced at 40%, your budget will be a very simple thing to overcome. So we can look at that May 2019 question number 5 a very fast. Then I even give you like 3 minutes tuangalie shida imekuwa wapi. As you do your revision, kitu gani imeshindikana hapo katikati. Are we really overcoming ama vitu zimeendelea kukua ngumu? Do we still need like 2 months? Ama hii 3 weeks imetosha? So that's what we need to consider again. Are we ready? Ama bado tukoje April 2024? Are we really ready? Ama tunafaa tungoje April 2024? Question number 5A. Tuangalie hiyo inasema nini hapo? Are we really ready ama tungoje April 2024 ndio sasa tuone vile tutapita hiyo mto sasa? So we are being told that Limu Processing Company Limited manufactures a standard product branded LM. Currently, it is operating on a normal activity level of 70% with an output of 6,300 units. The sales director believes that a realistic forecast for the next budget period would be at an activity level of 50%. Tunaangalia kwa hiyo list. Tumepewa 60, 70 na 80. Then the following data relates to the forecast cost for the product for different level of activity. Tukuna direct material, direct wages, production overheads, just specified. Administrative overheads, they are not specified what is fixed, what is variable. Lakini tukiangalia hapo vizuri, do we have any variable cost under administrative overheads? Do we have variable cost hapo? Do we have variable cost hapo? Alafu tuteremuke selling and distribution overheads 169, 200, 176, 400, 183, 600. Do we have variable cost under admin overheads? Do you have variable cost? As the activity level changes, the selling, the administrative overheads does not change. It is constant throughout. We can assume that it is fixed cost, but they want you to prove to them that there is no variable cost inside that particular item. Will you prove? Will you manage to do that? Let's see. So for us to do that, we need to identify, if you are going back to y equal to a plus bx, which method? We cannot use regression here. We cannot use regression here. So which method are you going to use? You're going to use what we call I-low method. Wenye wako wanaelewa walikuwa naepa I-low method, imekufuata up to topic number 9. Imekufuata up to topic number 9. So let's look at what we have there. Let's look at the actual units. Tumeambiwa at normal activity level, which is 70%, is equal to 6,300 units. Are we able to go ahead and get at 60%? At 60%, tutakuwa na 60% by 6,300. You divide by 70%. You give me the number of units. At 80%, itakuwa 80%. You multiply by 6,300. You divide by 70 units. And tumeambiwa something about 50, which we are supposed to prepare now. 50% will be 50% by 6,300. You divide by 70%. Aya, watu wapeane answer sasa. 5,400 ni 5,400, I think ni 60. Alafu hiyo mingi more than 70, I think tunasema about 80. Aya, watu wanapatia ya 50. Ya 50 ni ngapi? Night anasema ni 4,500. Someone to agree or disagree with the information? Mtu akatae, akipatia different figure ama kubaliane na yeye. 4,500 units. Aya, sio imeingiana sasa. Ukifanya tu hivyo, hiyo ni 1 mark. Tumejua unaelewa kitu yenye unafaa ufanye. Now let's come to direct materials. Direct direct materials. Here, the total cost is being driven by the activity level. Our activity level hapa tumesema ni nini? Ni units that have been produced. Na hiyo inaitwa X. So what do we have as X? We need to get the highest values pair and the lowest values pair. So the highest values pair, it is X, Y. Are we having the total cost of direct material at lowest? Remember, if 50 tumeambiwa tutafute vitu zake. If 50 tumeambiwa tutafute vitu zake, but we cannot look for vitu za 50. They are not there. So we just use what we have here first to do what? To get this variable cost per unit and the fixed cost per activity level, which does not change. So the highest value, we look at what we have in the 80% column and 60% column. So the first thing under direct material, I'm able to see 80% we have 201,600. Lakini units at 80% ni 7,200. So 7,200, 7,200, 201,600, that is the highest. Then the lowest value pair at 60% ni 5,400, at 60% it is 151,200. Siko hivyo? Are we together up to this point? Because beyond this point, kama umepotea, itabidi turudi nyuma. Why have we used 60% and 80? 𝐼LO method. Atuchukue ya katikati, unachukua the highest values column and the lowest values column. Is your question answered, Catherine? Is your question answered? No. I've said we are going back to topic number 3, the 𝐼LO, cost estimation. We are estimating cost using 𝐼LO method. The 𝐼LO method, we are supposed to look for the highest values pair and the lowest values pair. The highest values pair here, it is X, Y. In the cost function, this Y represents total cost, which we have it somewhere. And then this A represents fixed cost. This B represents variable cost. In short, what we don't have in this question, for us to be able to come up with a budget at 50% activity level, hatuna value of A, hatuna value of B. Because if we have A, we just know direct material, the whole of it is variable. If that is the case, I will take direct material per unit, I multiply by the value of X, which is 4,500. Sina hiyo, I have to look for A and B. The only way to look for A and B, for me to come up with the cost function, is by use of how many methods? Is used by use of around 4 methods. We have 𝐼LO method, we have regression analysis method, we have accounts analysis method, we have graphical, we have scattered graph method. So can we use scattered graph method here? We need a lot of points to do what? To plot this. And time as well. Do we have regression analysis? We need to get several figures, not just 3. Not just 3. Which one will be suitable for us to do that? It is the 𝐼LO method. Under 𝐼LO method, we need to get the value of X. We need to get the value of Y. Tumepewa X. At 80, the highest value pair, at 80%, X is 7,200. And Y, which is the total cost of direct material, is 201,600. The lowest values pair at 60%. So at 70, at 60%. Ningapi? 5,400, that is X. At that point, the total cost, which is Y, is equivalent to 151,200. So we use this to get the value of A and B. Oh, good. 50 hatujapewa, ndio tunafanya nini? Tunataka kutafuta. So let's go ahead and come up with the cost function. How do we get B? Remember, B is the gradient or the slope of the curve. So B is equal to change in Y over change in X. Change in Y over change in X, we take the highest, that is 201,600 less 151,200 divide by change in X, which is 7,200 minus 5,400. My good friend should be able to give me the answer, the value for B. The value for B itakuwa ngapi? Alafu tunaendelea tukuje wapi sasa? Tukuje hapa tutafute the value of A. Y, which is the total cost, is equal to A plus BX. Do we have Y? We pick any of the points, either the highest or the lowest. So tuseme tumetumia highest. Y, which is 201, 600 is equal to A, atujui hiyo A, plus BX should be giving me B. Should be giving me B, 28. So it is equal to A plus BX, which is 28. And that 28 we multiply by X. X, when 200 and total cost is 201, 600, that is Y. When Y is 201, 600, X is equal to 70 what? 7,200. What is the value of A? 1,600 minus 28 by 7,200. What is the value of A? What is the value of A? A is equal to 0. What does it tell you? From your class, of course, you're just describing yourself, but sasa nataka tu fikirie kidogo. Are you able to remember when we were dealing with direct material? Direct material was 100% variable, is it? Direct material was 100% variable. That's why our fixed cost is 0. The whole of this is variable. Now, let us confirm. Let us confirm if the total direct material cost is variable, then it means if I take at 80%, I take 7,200, we multiply at 28, which is variable cost per unit, I'm going to get 201,600. If I go at 60%, nichukue 5,400 units, ni multiply by the cost per unit, I must get 151,200. If that is true, then automatically my workings are correct. Is that the case? Ukichukua 7,200 by 28, you are getting 201,600. Ukichukua 5,400 by 28, you are getting 151,200. Is that the case? Great. But what we are looking for tumepata. Tumepata that variable cost per unit under direct material is basically 28 shillings. So that's what we are going to use. Ukikuja hapa hivi ku prepare 50% activity level direct material, itakuwa ngapi? Itakuwa 28. We multiply by the units at 50%. Ni ngapi hapa? 4,500. Aya, mtu achape hii anipatie figure. Unapata ngapi? 2,800 by 4,500. 2,800 by 4,500. Unapata ngapi? 126,000. Imagine just that. Ukifanya hivyo wewe unateremka tu and you get your marks. Aya, the next thing that is given there is direct wages or direct labor. Tukuje sasa to calculate your direct wages. The direct wages, we follow the same procedure. Direct wages, I am not on our site, so sad. Direct wages, I is going to be 86,400. Sorry, it is X first. Then low will be 64,800. Yeah, I'm really confusing these things. 5,400, 64,800. So let's come and get the value of B, change in Y over change in X. 86,400 minus 64,800 divided by 7,200 minus 5,400. Give me the value of B. Then A will be equal to Y. We pick one of them here, 86,400 minus the value of B times A. I've decided to pick this one here, times 7,200. B is 12. Thank you. So 12 times. Ukifanya hivyo, what will be the value of A? A is 0, naambiwa B ni 12. Somebody to confirm ama katae hiyo, so that you can look for the next alternative. So that will be 12 times 4500. Haya. Kama kuna mwenye amekataa, what is the total here? What is the total there? What is the total there? 54,000. Time imepita sasa. I just want us to get maybe one of the fixed. Yes, production overhead. Production overhead. Production overhead, the highest value pair there is 179, 200. 179, 200. 179, 200 at 60%, 5,400. 5,400, 1,5,400. Aya, sasa the value of B is changing Y over change in X, 179, 200 minus 1,5,400 over 7,200 minus 5,400. Ukifanya hivyo, what will be the value of B? Then you go ahead and give us the value of A, which is equal to 179, 200 minus the value of B times 7,200 for us to be able to get the value of A. Good. B tunapata 16. Ukimultiply hapa na 16, now utoe from 179, 200, you are getting a value. So what is the value of A? What is the value of A? 64,000. Ukipotea unasema, so that 64,000 is the variable production, fixed production overhead. But now we have direct material. Hapa niliambiwa ni ngapi? Was it 64? Hii nyingine watu walipata ngapi? When you multiplied 12 by 4,500, ulikuwa unapata ngapi hapa? 12 by 4,500, ulikuwa unapata 54,000. Then this one will give us what we call prime cost. So you weke prime cost hapo sasa. 126 plus 54, is it 180,000? Is it 180,000? Then you add variable production overhead. Then we add fixed production overhead. So the variable production overhead, of course, will be, to be nimeambiwa ni 16, I multiply by units. 16 by units ni ngapi? 72,000. Alafu fixed production overheads nimeambiwa ni 64,000. Na tunasonga, then to the prime cost here, you are going to add those ones. We move to the next thing, admin overheads. Admin overheads, you don't know whether there is variable or fixed. So tutakuja hapa, tuseme admin overheads, tumepewa H, tumepewa low, H, there is 7,200, comma 126,000. Then hapa yuko na 5,400, comma 126,000. Ukiangalia tu hii kitu vizuri, is there anything that is variable there? But unafaa calculate uangalie. Si ndio? Unafaa calculate uangalie. This minus this will be 0 over this minus this, we are going to have a 0. That is the value of B. Then fixed cost will be 0 times 7,200, then 126 minus 0 times 7,200. Unapata B is equal to 126,000. Sasa the whole of this is fixed. Admin cost, the whole of it is fixed. The whole of it is fixed. Alafu unamaliza na selling and distribution. Hiyo ni variable. Selling and